Good morning, traders. Today's Monday, February 20th, President's Day. We are not trading today, but I've got some quite important news, information to share with you. They are synchronizing an up move. Three major indices. I consider Bitcoin an indice, by the way, because it's just so standalone by itself. Bitcoin, Dow, and SPY are synchronizing an up move. The Dow has been in, for the last month, a broadening wedge megaphone pattern. Why was it doing that? Because I think it's been waiting for Bitcoin and SPY. SPY, as you know, last Friday gave a higher low. And now Bitcoin, which I'm going to show you also momentarily, is right on the weekly EMA doorstep. It is right there. They're all synchronizing to rise at the same time, guys. And I'm going to show you conclusive evidence of that. Okay? So, and I'm also going to give you a nice little tips and tricks on how to use the 4-hour or 5-hour chart, which includes extended hours. You must include extended hours in that chart. How to predict every top. And I'm going to show you all of 2022 how to do it. Okay? Then I'm going to show you the critical flaws of using the daily MACD. I've been getting a lot of comments and questions on that, and I think it's time to clear the air on that. There are critical flaws with using the daily MACD, which is why you never hear me even talk about it, because I don't use it. I only use the weekly MACD. Now you hear me talk about that all the time. On the weekly wrap-ups. And then I go from weekly, I skip the daily, go straight to the 4-hour, which includes extended hours. I skip the daily altogether. Okay? At most, I will look at the daily MACD like on a Friday night after the market closes. So that gives you an idea how important I place on the daily MACD, because I'm going to show you, prove to you why you will miss the boat if you rely on the daily MACD. You will miss the boat. Okay? Then we're going to get into swing trade strategies for gold and uranium. But it doesn't matter if it's gold or uranium. Just focus on the strategy itself. I'm going to focus on the weekly MACD, weekly, 4-hour, 1-hour, and then 5-minute. Okay? So, yes, I tweeted this out. The stars are aligning, guys. The stars are aligning. What have you been up to, you busy little bees? Everyone else on YouTube is so bearish, calling for a crash. I saw Seeking Alpha was like, this looks like a pretty good short opportunity. Looks like the markets are tiring. Market maker's about to pull one more head trick. Hat trick, not head trick. Head fake. Hat trick. It's actually planning to go up, not down. And all you YouTube channel bears out there, all of you are about to get conveyor belt of pies to the face. And all of you Discord members who follow you bearish channels, you're going to get the what do they call that? After the pie hits the face, you get the what of your fearless leader, your fearless bear leader. You know, you're going to get the deflected pieces that come off of it by following them on Discord. Okay? So, we all know BTC is a risk-on asset. And when it is risk-on, what does that mean for the broader markets? When it's risk-on, it means it's on. Okay? Let's get into it. BTC. Now, this was actually on February 5th when I tweeted this 2 weeks ago. Just over 2 weeks ago. I kind of, as a favor to someone, on Twitter, I drew out these channel lines, drew out the lines. See that? These are basically the matrix lines for the BTC. Okay? I just want you to focus on this region right here. 23,194, 22,060. Okay, so just look at this range right here, because I want to show you what became of the pattern after I tweeted this on February 5th. All right, so you got that visual right here. Let's check it out. How did it go? Okay, here we go. Came up to it, came back up to it, hit resistance, came down below 22,060, consolidated under the channel line. Always bullish. You guys know that. Boom. There you have it. It rocketed straight up. It was consolidating under this line right here, 23,194, for a good long while. Came down, consolidated under this line, and then boom. All the while, it was intending to make a higher low here compared to here, the breakout point. See that? Look at that. Look how it's just perfection. That is classic day trade. Classic day trade pattern. Okay? This whole setup is bullish. There is nothing bearish at all. At all. Because when you're looking at, what is this? Oh yeah, this is the daily. There's the daily. It's just, it didn't even touch the daily EMA at all. At all. Okay? But yeah, see, here are the perils. But you could say, well, look at the MACD on the daily. You got the separation right here, don't you? Oh, yeah. you got negative cross right here. And it's actually increasing. But the whole thing was bullish. See what I mean? Now you see the flaws of using the daily MACD. I'm showing you right there. That's why I don't use it. Okay? All right. So, all right. So, yep. There's the. Okay. Here we go. Let's get to the next slide. Okay. This is the 1 week. Oh yeah. Here we go. Here we go. Look at this setup. Consolidation under the weekly. It didn't even come back and touch this. Doesn't even come back and touch it. And now look, the weekly MACD. It's right. It's just right there. It's right there. And now look at this. Consolidation just under it, right? This week's just starting, so I mean, you can't quite extrapolate that. But just look at this. Up, 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 down, down, up. See what I mean? Like, oof. That's not bearish at all. It is a matter of time. I think this week, the weekly EMA, which is 24,768, I think. I think we're going to see that in another slide. Oh yeah, it's down here. You barely read it. Yeah, here you go. It's cut off. 24,768 will be taken this week. Bitcoin will take it. And you're going to see some conclusive evidence of that. This whole thing is bullish. It is not bearish at all. Okay? All right, we got it. What do we have here? The 1 hour chart. Okay. Back testing, finding support at the 1 hour EMA 50. Yep, resetting at the 0 line. Yep, right here, reset at the 0 line. See that? Higher lows, higher lows, higher lows. And man, this thing is, it's nothing bearish whatsoever. Okay? Nothing bearish whatsoever. Yeah, consolidating under 24,768, the weekly EMA 50. Yeah, it's under there. It's 24,768 is like right up here. You can't see it on this tweet though, but you will on the next one, I think, or the one after that. Okay, so this one's just to show you. Compare again. Look at the beginning of 2022, around the February. The weekly MACD crossed below the 0 line. All the rest of 2022, it stayed under there. Okay? Until now. Oh, it's going to cross. There's nothing that's going to stop it. There's nothing that's going to stop it except for a black swan event that we don't know about. It's going to cross. Like SPY has already crossed. Okay, let that sink in for a minute. Bitcoin has bottomed. I know there's some experts out there. They're still going lower. Well, you're about to get some massive pies to the face if you got some puts on Bitcoin. Bitcoin has bottomed. The bull market for Bitcoin has now resumed. BTC is back, guys. Bye-bye bear market. It's now about to be risk on. Right? So, here we go. 4-hour chart, BTC. This is hella hidden bullishness. Hella hidden bullishness. Look at this. 4-hour chart. You came up to the weekly EMA 50 right there. Yeah. 24,782. Yeah. Right here. Earlier it was 24,7. Whatever. It's close enough. Okay. It doesn't. You came up. This line, this red line, has denied BTC all of 2022. So now you come up to it last night, by the way. Last night, you come up to it, mess around up in here, and you just retrace back to like the 4-hour SMA. Don't even bother going back to the 4-hour EMA. That's hella bullish. That's hella hidden bullishness. That's what I call that. Hella hidden bullishness. There is no other interpretation for that. You guys heard me say intraday. When on the 5-minute chart, when on the 5-minute chart, if it's finding support on the SMA 20 line, the gray SMA 20 line here, oh, that's bullish. When it doesn't even need to touch the red EMA 50 line, that's bullish. That's hella bullish. Okay? That's hella bullish. All right? There's no other interpretation of that. But if you don't have these lines drawn out, if you didn't even know the weekly EMA 50 was right there, you don't have the SMA, you don't have the EMA, you just look at that, it's like, oh, I think it's finding rejection at the 25,000 level because that's just an easy number that for people to just know, like VIX to 20. It's just a round number that people psychologically they like to know. But actually, the issue is not 25,000 even. It's 24,781. Once it breaks 24,781, 25,000, it's just gonna blow right on past that like it wasn't even there. Hot knife through butter. Okay. So just look at this. This is crazy bullish. Okay. So yes, the massive Cobra strike is coiling underway. So this was last night. Even though you started to see this red candle right here, right? Right here on the, look, check out the 4-hour SMA 20 gray line right here. See that? Okay, got it? So, I said the Cobra strike is coiling underway. What became of that? I said that at 5:39 p.m. How did that prediction end up? This morning I tweeted out, boom. It took it back. This morning. Well, that's when I sent the tweet. Sorry. This would have been like late last night. You know how for the holiday it's gonna stop. This would have been late last night. Whenever it stopped, whenever the clock stopped for Bitcoin, around the same time as the rest of futures stopped. Right at closing bell, it took it back. It took back the weekly EMA 50. This one here was the first attempt. I fully 100% expect a rejection. 100%. And boy, you got it, didn't you? Look at that. Boom, boom. You got it. But what is hidden bullishness about it is you came down, found support at the 1-hour EMA 50, and you rocketed right back up and tried to take it again. You tried to take it. You rocketed back up and tried to take the weekly EMA 50 again. 1, 2, 3, 4, 5, 6 times. That's bullish. When you that many attempts without having to deeply retrace like this, oh, you're gonna do it. There's nothing bearish at all about this chart. Nothing. This is the definition of hella hidden bullishness. The definition. Look it up in the Webster Dictionary, and you're going to find this screenshot. Okay? So, I mean, this is, yeah. Oh, yeah. It's just putting on a show for everyone who thinks 25,000 is the real number. Oh, no. It's going to smash through it this week. I can't, how could you go through all this work and then say, oh, well, I guess we're not going to take that line after all. Oh, no. That weekly EMA 50 that has denied BTC in all of 2022 is going down. It's going down. BTC will be denied no longer. Dow Jones, let's check it out. There's your broadening wedge. There's your megaphone pattern for the last month, essentially, for the last month. Okay? But guess what happened on the 16th? What would that have been? Wednesday? Thursday? I think Thursday. It created a higher low on the 30-minute MACD chart. On the 30, this is the Dow futures, by the way. On the 30-minute. To contrast that, I use the 1 hour on SPY, but I find Dow, perhaps it's the 30-minute that matters. Okay? It doesn't have to all be the same, right? It doesn't have, Dow, NASDAQ, SPY. They don't all have to say, well, you got to use the 1 hour. I think perhaps Dow uses the 30-minute, and guess what? Late last week, we got the higher low that we've been not successfully able to have for the last month, essentially. Well, yeah, we'll see. Well, this one's a little bit higher low, but it was negated with this lower low. So now I think so basically this at this close on Friday, look at the retracement. It was basically doing a broadening wedge to me as just an extended retracement to me to wait for SPY and BTC. I think that's what they were doing all along, guys. This is not a bearish pattern necessarily. You cannot assume the next move is down, especially now when you have a higher low on the MACD. You cannot assume that. If you do assume that, good luck, because now you're going against data. Okay? So, yeah. All right. SPY. Let's talk about that. This is last night, by the way. This is futures. Futures opened down right here. It opened down. This was basically a close on Friday. So it opened down. But I have reason to believe this small down move, this is not a big down move, guys. Very small. Right? And you'll see that in a moment. I think this is the weekly for this week. This is the weekly wick low. It just created the weekly wick low. I do believe that. And I'm going to show you intraday patterns that highly suggest that what it did last night, this down move, last night, is the weekly low. And that from this point forward, we're going up. Okay? So let that sink in for a minute, because you're going to see some corroborating evidence, right? So, here's the moment it took back that EMA 50. I was like, see, here you go. This is a 5-minute chart. The moment it took it, and then look, it didn't even bother. It didn't even touch the SMA 20. That tells you that's hidden hella bullishness. Remember I talked about that earlier for Bitcoin, when it was like man, it's finding support at the 4-hour SMA 20, which is way above the 4-hour EMA 50, way above it. And in this case, it's not even touching it. The whole night it was floating up, not even touching it. All right. So that's this is hella hidden bullishness, guys. I mean, at the end of the night, it kind of came down, but now I bet it's gonna come down, probably just at the end of the night, and then I bet it's gonna consolidate underneath of this again, and then it's gonna pop up again. Okay. Notice that the sell-off wasn't like, whoa, 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 went down below the EMA 50. And then, no. Nope. Okay. So, okay. I did tweet this out last night, actually. I said, don't take this as a prediction. But, yeah, we got hella separation. At the time I sent this tweet out, was here. This would have been equivalent to here. That's hella separation. I was like, man, look at all that daylight in between the price action and the EMA and SMA lines. That's hella separation, okay? I have reason to suspect that tonight is the bottom for the week. That's what I just showed you a moment ago. I think that's a wick low. Okay? But at the same time, I was like, well, I don't want to quite get ahead of ourselves. But I am going to show you evidence that that's the wick low. Now, before I show you the evidence, you know I got to show you intraday stuff. This is last night, so it's not intraday trading day. This was last night, 5-minute chart. Because I like to show you patterns before I show you what I think is going to happen. Okay, see this? Down, down, up. Down, 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 up. Down, 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 up. Notice how down, 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 up. So, like even this green candle is down. This is even lower down. Up. Okay. This is a classic intraday down, down, back up. Okay? That's classic intraday patterns when it plans to go back up and reclaim a line, right? Like up and reclaim this line. Up, 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 up. Okay? Got that? So you got that visual now, right? This is intraday, classic, standard, traditional patterns of when the down move is now stopped with a slightly higher low here. Got it? Okay, you got all that, right? All right, here we go. This is the weekly. Up, down, up, up, down, down, up. Now, do you see? It would be because, and the corroborating evidence is, these last 2 weeks, and even to my surprise, it's to my surprise as well. I didn't expect this at all. These last 2 weeks are shallow. They're very shallow. I don't think. I mean, combine that with the MACD being above the zero line now for a good how many weeks now? Let's see. 1, 2, 3. Oh, you want to count this week? Well, let's count. Let's not count this. 1, 2, 3, 4 weeks, a month. That makes sense. That makes sense. Pullbacks are shallow. Pullbacks are now dips, not falls or crashes or legs down. When the weekly MACD is above the zero line, I'm going to show you conclusive evidence of this to put it all to rest. Put it to rest. We are now, the market is now in buy the dip mode. It's in buy the dip mode. Okay? So, that's why this candle, when you're in this type of mode, this type of bullish setup, this third candle will not go lower. The only reason to make this third candle go lower is you need a big red one like this. Big red. Red, big wick down. Then this one is expected to go lower. This, sorry, it's like little lower, a little bit lower. You see what I mean? Lower, a lot lower, a lot lower. You see the pattern now? And why was this? This was December, by the way. Lower, a lot lower, a lot lower. Because look at the MACD at the time. It was below zero. That's why. The MACD weekly is now well above zero. That's why you don't have these huge pullbacks. And at this time, this red candle with the big wick, what was this? Still below zero. See? I left this 5-minute right here so you can just see as reference. Yeah, that's the low, guys. Last night futures. Because it's about to go up. Okay? It doesn't make sense for this candle to go lower than this one. It doesn't make sense. Because the weekly MACD is now above zero. We're in dip mode now, guys. Not fall. It's all about the strength. It's all about the strength. Okay, let's talk about the daily MACD. Why it's a problem. A big problem. Okay, on January 4th, right here, January 4th, let me turn on the, should have done that at the beginning of the presentation. On January 4th, I said, hey guys, the 5-minute MACD is above zero. And we need, once we get a confirmation of a successful backtest off the EMA 50, that's a trend change. Set that on January 4th. Now, let me zoom in on this. When did the daily MACD have a positive cross from the signal line? January 9th, 5 days later. That's too late. It's too late. 5 days later, it crossed. You're waiting on the daily MACD to tell you what to do. You're too late. The trend change happened 5 days earlier on the 5-minute EMA 50. The reason why the daily MACD is too late is because it excludes all overnight and pre-market data. It only includes open, close, high, and low for that trading hour, for those trading hours intraday. That's why the MACD cannot be used reliably. That is why. So that's why I just ignore it. I just go straight to the weekly, because the weekly overrides the daily anyways, right? It overrides the daily anyways. And I'm going to show you conclusive evidence that just puts it all to rest once and for all, okay? Put it all to rest. Okay, yeah, you were late, being the January 4th versus the 9th. Not only are you late, you cannot identify where the bottom is, because the bottom is always determined, like every time I look, the bottom is determined in the pre-markets, which is excluded from the daily. You would have identified the bottom. Okay? So that's why I don't use the daily at all, ever. You don't ever hear me talk about it in any of my episodes. Okay? So let's put this bad boy to rest once and for all. 2 times in 2020. Remember how we came out of the pandemic? We came out of the pandemic. I chose the week of July 2020 right here. This point right there. The weekly positive cross above the zero line. That is equivalent to where we are today, guys. That's equivalent. Close enough, right? Equivalent. From July through September of 2020. Two times. The daily MACD had a negative cross below the signal line. And did it call the tops? Nope. Look up. Not at all. Why? Because the weekly is over the zero line now. You're in a bull market by the dip mode now. That's why the weekly overrides the daily. This method would have worked in 2022 because the weekly was below the zero line the whole year. Well, ever since like February. That's why you could rely on the daily MACD calling a top, because the weekly was too far below the zero line. But now the weekly is above the zero line, you can't look at the daily anymore and say, oh, that's top. Boy, if you would have got puts when you relied on this daily here, oh my gosh, you would have gotten just waylaid. You would have gotten waylaid. And so guess what? Even though the daily has slightly crossed below the signal line, where are we in 2023 on the weekly? It's crossed the positive. This crosses the zero line. There you have it. Okay? That's why. Cannot look at the daily. I just ignore it altogether. All right. Okay, yep, I just explained all that. All right, here we go. This is the 300-minute or the 5-hour chart. Every single top in this is all of 2022, by the way, guys. Just look. I draw the red arrows straight down. Just look. This is the 300-minute, or you can use the 240-minute, which is the 4-hour. Check it out. Every single top has bearish divergence on the MACD, and you can call it. This applies whether it's bull or bear market. It doesn't matter. It doesn't matter. Bull or bear. And why does the 300-minute in this situation work? Well, the 240-minute, that's fine too. You'll see the same, very similar trend. Why does it work? Because it includes extended hours. That's what you see in these gray shade. It's very small. But this is a gray shaded area back in here, right? It's all scrunched together with the intraday stuff. Because it includes the extended hours stuff. Extended hours and pre-market. That's why this works. That's why this can call the top. Okay? So, there you have it. So just check it out. Study it. Here we go. Swing trade. Gold and uranium. Here we go. Basically, we are going to talk about the weekly, right? The weekly, the 4-hour, the 1-hour, and the 5-minute for both gold and uranium. Here's the weekly. Check it out. Wick up above EMA 50, consolidating. Look at that. Okay, so December of 2022, when I said, yeah, gold's about to rip. Oh boy, did it. But now it's just giving some back on the back test leg. See, look. That's still a higher low. Higher low, wick up. This is the weekly, guys. Higher low, wick up. Not even touching the EMA or the SMA lines. That's hella bullish. This is just garden variety retracement from the breakout point. We'll just call it 50%. 60%-ish. Okay? It's just garden variety retracement. It's still, when you look at other circumstances, corroborating evidence, the EMA 50, SMA 20, not even touching it, and it's wicking up. Okay? If this had true weakness, you're gonna have a wick down and then a big red body candle. you're not going to have a wick up. You're going to have a wick down. Like this. Like this. Wick down, big red body. But no, you have wick up, small red body. Aha. Okay? So that's important. Now let's skip over to the 4-hour, because you know me about the daily. I'm just going to skip the daily, man. Okay, here's the 4-hour. Check this out. Now, I want to point that this is gold. This one was tricky. When I looked into it closer, I'm like, oh, you sly dog. Okay, see this? See this line? It's kind of going up, and then it's kind of going down, going up, going down. It looks like it's kind of going up. This one was tricky when I looked into it. I recommend on the 4-hour, just wait for this dip. Wait for the fall. Don't this. It's tempting to look into this and say, ooh, I'm gonna go ahead and get on in, and it does dip in the end. I think you gotta wait for that conclusive drop. That's still obviously a higher low. See that? That's like, oh yeah, okay. Now, being that what you see here is we have the drop and we have a higher low notch, and now you have, look at that, separation from the signal line, and it's going up. Now's the time to get in. It's bottomed. Gold right now has bottomed. It has concluded this retracement leg. It's now going to start going back up to make even higher highs than this point. Okay, so that's the conclusion. So okay, so here's the top. Check this out. Oh yeah, there's some bearish divergence right here. But if you look at this though, once you start to see bearish divergence, like here at this point, you would have confirmed bearish divergence, right? Because obviously this is lower than that, obviously. But look how many days you actually have before it actually starts to like fall. It even has one more final crazy surge. See what I mean? So I think you have days. But to me, and if I'm day trading, as soon as I see this, I'm gonna go ahead and get on out because I don't know when the bottom's gonna fall out. Then when the sinkhole will open, but now you're dancing with the devil. You don't know when that sinkhole is gonna open. You don't know. You just know you have bearish divergence. So the longer you hold on, when you already see the bearish divergence, well, now you're just depends on your risk tolerance. Okay. So that's the 4-hour. 1-hour chart. Okay, yeah, see? Initially, this made a higher low, right? Here. And it even made another higher low. But yet it ultimately made a lower low. So that's why I say it's kind of, this one was tricky. And I haven't seen this pattern with SPY, so maybe it's something with gold. You know what I mean? It's just something that's unique to this particular security. So there you have it. So I mean, if you'd have got in like right here, you'd have got trapped 1, 2, 3, 4 days. Yeah, 4 days. But if you just wait for this drop, then you're fine. Because this drop on the 4-hour right here, yeah, it would have been right here. Then you could have gotten in at the bottom. See what I mean? Always know that as it is completing that notch with this drop, as it is completing the higher low notch with this drop, prices will continue to go lower. But once that notch is completed, that is the bottom. Prices will not go any lower. Okay? So, because look what happened. As soon as we hit the bottom, higher low notch down here, oop, it took the EMA 50 back. See? That was on Friday. It took it back. So gold is actually now ready to be swing traded like right now. Okay? The up move has started. Gold has bottomed on that retracement move. Okay? Here's the 5-minute. If you really want to get into intraday, this is on Friday, guys. See, look at this. Look at this. Look at this. If you really want to go intraday now and go day trading mode, just wait for it to reclaim EMA 50 right here. Boom. And what happened? Bye. Okay? That's what happened. Now, I want to show you guys something else. This is the next slide. But that's it. That's all I want to say about this slide. If you want to go intraday day trading mode now, it's like, well, when is your exact entry point? Wait for it to take back the EMA 50 and then go. That's it. Buy it, and now you're just going to hold it for 3-4 weeks maybe, or until you start to see bearish divergence on the on the 4 hour on the 4 hour chart. Okay. Remember last week when I said the mother of all squeezes is coming? Here's the same huge green candle that was on Valentine's Day 214. That huge green Valentine's Day green candle, I think is meant for Friday 217. They let it keep falling, keep falling, keep falling, keep falling. And here's where I say go back to your 1 hour and 4 hour MACD, right? To know that it's going to keep falling. But this big green candle on 214 was meant for Friday 217 up move. Because how are you going to kind of keep falling, keep falling, keep falling, keep falling, and all of a sudden, boom, like that? Okay? So that's what I think it is. And that's what I think, now suspect, when last week, when I put out that episode on Friday, I said the mother is coming. That big green candle that I saw was reserved, I think, for this week. That's what I think it is. All right? So, okay, let's go to uranium. Ooh. Oh, hold on a second. Hold on a second. Hold on a second. That should not be the right. Give me a second. Yeah. Let me go back. Okay, here we go. Here we go. This is the weekly. Yes. Oh, I don't have it, but yeah, I can tell it's the weekly. Okay, so check this out. Okay, December, when I put out that video, look at this. Boom, 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 boom. Here's the pullback, right? It went way up there, and then it got, here. Now we're getting a pullback. Back test leg. Wick up, wick up. Not even touching the EMA, not even touching the SMA on the weekly. That's hella bullish. Hella bullish. Wick up, wick up. Okay? So, and the weekly is way above zero still. Now, here's skip to the 4 hour. Okay, here's the 4 hour. Check this out. So it came down, down. Now here's your higher low. Higher low notch. There it is. See that? So down, 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 down. Higher low notch. You can even count this as a slightly higher low notch. That's probably okay. But know that relative to where you are, well below the zero line still, that explains why. Here's your small little higher low notch right here. That explains why you came up, but you couldn't quite take the EMA 50, so you had to come back down because you're too far below the zero line from your starting point. Okay? But this, look at your starting point now. You are not too far below the zero line. So, in my opinion, uranium is very, 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 very close to taking back the EMA 50 and resuming the uptrend. Look at the higher lows, higher lows, higher lows, higher lows, higher lows. Okay? This has got a lot of power, guys. Okay, so I want to point this out. This is neutral convergence right here. See that? That's still slightly going up, and that's going up. So that's not bearish yet. But from this point to this point, that's bearish. See that? Here and here. Here and there. See that? And then you went down. Okay? So wait for bearish convergence. This is a 4 hour chart. All right? So hope all that makes sense. And here's the 1 hour chart. Okay, this whole move right here is equivalent on the 4 hour chart to this move right here. Okay? Right there. So, this MACD higher low stops the fall. This to that. This to that. It stops this. It stops it. That's what it does. Right there. See the fall, 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 fall. This kind of sort of stopped it, but it was too far below the zero line. Well, this is the 1 hour. Oh, here we go. Yeah. This move right here is equivalent to this move right here on the MACD, but you're too far below the 0 line. So that's why the move did come up, but it kind of stalled and then came back down. But it made a higher low than where you started from. Okay? So, hope that makes sense. And yeah, here's the 5-minute intraday on Friday. When should you have gotten in? Well, obviously, if you go by the traditional EMA, SMA rules, EMA taking back the EMA 50 right here. So you would have gone up and see this. Oh, wait for the back test. Like, oops, not quite so much. Come up. Oh, no, not quite so much. But when you look at this, knowing what you have with the backdrop of information on the 1 hour and then on the 4 hour and then on the weekly, you start to see consolidation under the line, kind of like what BTC was doing. That's bullish. Okay? So I think on Friday, it took it back. Even with this big red candle, look at this. Look at the MACD. It said, boop, down. Oh, that's okay. I'm going to come back up. And now it's starting to, in extended hours on Friday, it started to get a positive cross on the signal line. So I think URA is ready for it's ready to rip it to the next leg up. All right. So that's all I've got for you guys today. Feel free to follow me on Twitter where I'm giving real-time tweets. Intraday. Don't forget to listen to your favorite music while you are trading or while you're not trading. It helps you get into the right state of mind, helps you achieve your Zen. Please give this video a like, share, subscribe, or click to be notified when I release something new. With that, I'm Agent 000, signing off.